Robinhood, ticker symbol HOOD, is gaining a lot of popularity recently. So in this video, I want to give you a basic overview so that you can take that and then decide if you actually want to do further research into this company and perhaps even add it to your investment portfolio. This channel is not financial advice, and please make sure you dive into your own research before making any investment decisions. Before we dive deep into Robinhood and find out exactly what they do, key metrics, and what could be in store for this company in the future, I'd like to quickly remind you to like and subscribe to the channel. And don't forget, if you want to leave a stock that you want covering, put it in the comments below. And if you're considering making any of your own investments, check out the link that I've left in the description where you can get a freebie to get you started. Now let's jump in to why Robinhood may be a stock that you want to keep your eye on. So if you've got growth stocks in your portfolio, you may have already heard about Robinhood. Or of course, if you're an investor and you actually use Robinhood's platform, again, you may have heard of them. But actually, I don't know how many people truly know what they do. Robinhood was founded in 2013 by two Stanford graduates who wanted to make financial markets and investing more accessible to the average person. Their mission was revolutionary: to democratize finance for all. They identified a gap in the market, which is what all amazing businesses do. And the gap that they identified was that they saw traditional brokerage firms were charging per trade fees. This was an obvious and clear barrier for all those inexperienced, new, and maybe those investors that actually didn't have vast amounts of money but still wanted to invest. So they introduced a commission-free trading model. And that completely transformed the landscape of investing. I couldn't even imagine, as an investor myself, a world whereby I didn't have commission-free trades. And this approach opened up the stock market to a range of new investors, a whole new demographic. Particularly younger investors actually that were more comfortable with Robinhood's technology, and those that were less likely to have large sums of cash sitting and waiting to invest. They initially focused on stock trading, but since then they've expanded their offerings, with the latest being into the world of crypto in the European market and the expansion into the UK market, which we'll come back to later in the video. So now let's think about some of the key metrics. And of course, I don't have time to include them all in this video, but I'll just give you an overview. In Q3, Robinhood was one of the companies with the largest level of institutional funds buying shares. What does this mean? Well, this means that those large institutions with a lot of credibility and a lot of experience want to own Robinhood. They want exposure to this stock. And this brings institutional money and ownership to Robinhood. This then means they potentially have increased access to capital, increased credibility because they are being purchased by these large firms. The stock may have stronger stability and may just be less volatile. They did, however, in their last earnings, report fewer monthly active users, which actually fell 16% to 10.3 million in the third quarter from the same period last year. But compared to other competitors, this looks okay. And with the catalyst that we're actually going to speak about in just a minute, this number may actually be growing very soon. And remember, this is measuring active users. The word active is important because users can still be using Robinhood as their chosen platform, but they may not just be active investors. They may invest only once every few months, and they are not counted in this. Looking at this, which I've taken from my Seeking Alpha platform, if you want to sign up to that, by the way, use the link in the description. That link will give you $50 or the equivalent off and a 7-day free trial, so you can make sure you like it. But you can see revenue growth year over year is 32.29%, which has been given an A rating as a sector relative grade. But the revenue forward growth is only coming out at 3.62%. When you look at the revenue breakdown for Robinhood, in the past, quite a lot of that was actually coming from crypto, but from what I can tell, that is slowly changing. In 2022, there was a revenue growth decline, but that seems to be getting back on track now, and they seem to be doing pretty well in high interest times. Something that I do want to point out, which is quite a big milestone for a lot of Robinhood investors, is that in Q2, they reached a significant milestone by achieving GAAP profitability for the first time as a publicly traded company. They did not, however, report GAAP profitability in Q3 due to regulatory issues, which means they are not yet eligible to be included in the S&P 500 index. but from what I can tell, they are working very much towards that. Now, when we think about whether or not we may want to add a particular stock to our portfolio, not only do we have to look at what's happened in the past, but more importantly, we have to think about everything aligned for the future, because we are becoming investors now to gain future benefits. And there are actually quite a number of things aligned for this company. So just to kick us off here, we'll start with expansion of product offerings. And actually, Robinhood has consistently been expanding their product lines. This includes the addition of cryptocurrency trading, options, and potentially even retirement accounts. And we expect to see this continue, and maybe they will actually announce a credit card launch because they acquired a credit card startup called X1 in the summer. The next catalyst is user-based growth, and I touched on this a little bit earlier in the video. Despite market volatility and despite competitors that we'll get onto in a minute, they have actually had a pretty loyal user base. The company's focus seems to be on appealing to the younger demographic, those that are just starting their investing journey, those that don't have large sums of money and actually want commission-free trading. They want a nice app that they can use. Then we have international expansion, and I think this is one of the main catalysts that people are very excited about. Obviously, as an investor into a company, you want to see that business moving into international markets and growing their consumer base and their revenue streams. Robinhood are now offering a crypto-based platform in the UK and in Europe. This is very, very new. And this is just in time for the next crypto bull run. So they are positioning themselves very nicely to see a big uptake in users. But we'll have to look back and see how that went in the future. But they are anticipating to release their stock investing platform in the UK very, very soon, and then moving forward from that, other places in the future. And like I alluded to earlier, another big catalyst would be that gap profitability and that eventual S&P 500 inclusion, which is a significant milestone for any company. But then we need to consider the risks. With reward, of course, does come risk. Now, one of the big ones for Robinhood is regulatory scrutiny. They have, so far in their journey, faced significant scrutiny from regulators, with everything from their business practices to their compliance with financial regulations. Now, of course, we just have to be aware that any changes in regulations or any negative outcomes from regulatory actions that Robinhood actually have could impact their profitability and their operations moving forward. I'm not saying that's going to happen. I'm just saying to definitely take that into account. Now, the next one is just their dependence on market volatility. As far as I understand, Robinhood's revenue is highly dependent and highly reliant on trading volumes, which can of course be impacted and influenced by market volatility. So periods of lower market activity could then lead to reduced revenue for the company. Then we have macroeconomic conditions. These are things like interest rate rises and anything in the macroeconomic world that could impact investors' behavior and investors' decisions. Potentially, if less people are investing money through Robinhood's platforms, then that will negatively impact them. But as they expand their product line offerings, they are sort of shielding themselves away from the macroeconomic influence. A big one in this space is, of course, competition. The online brokerage space is very, very competitive, with many established players already in that sector and many new upcoming ones that we see all the time. So I think as long as Robinhood continues to innovate, continues to diversify revenue streams, continues to attract new users, they will be okay. But something to be aware of. When thinking about competition, I do think that Robinhood is a pretty strong competitor, but you also have the likes of Webull, SoFi, Fidelity, eToro, M1 Finance, Coinbase. Of course, the competitor depends on whether you're looking at stocks or crypto, but there is a lot of saturation in this space. Now we need to think about the overall sector trends. There is a fintech revolution. The fintech sector has been undergoing a transformation driven by technological advancements. This includes the rise of blockchain technology, utilizing AI, artificial intelligence in the financial service sector, and just the growing popularity of digital wallets and online banking. So Robinhood is positioned very, very well to capitalize on that growing sector. And again, hand in hand with this one is the growing shift towards online trading. People aren't really using traditional brokerages and banks anymore. They are looking for the latest, the most savvy app where there's commission-free trading that they can start their investment journey with. And then of course we have the rise of cryptocurrency. Cryptocurrency is becoming increasingly popular in this day and age. And this has led to a growing demand for cryptocurrency trading platforms. And of course, Robinhood is one of the largest exchanges for that in the US. And like I said, they have now expanded that into the European market. Lastly, we have to think about the growing popularity of fractional shares. Again, that's something that Robinhood offer. As an investor, I definitely couldn't imagine not having the option to purchase fractional shares. It makes that barrier to entry lower for new investors. And it makes Robinhood more applicable to a wider audience. Now, I don't know if that's such a competitive edge because a lot of companies do offer that nowadays, but it's something to consider. This is again taken from Seeking Alpha, but what you can see here is that if we look at a 1-year period, Robinhood has returned about 19% to its investors, which is actually really, really good and does outperform the typical 8%, 10% that the index may give. However, if we then expand this across a 3-year period, we can see that it has not had such a good time and actually underperformed the index significantly. What you'll also be able to tell is if I max it out, you can see here that the chart just cuts off. That is because Robinhood has only become public very, very recently. And in that time, it's safe to say it's been very, very volatile. To purchase one share, at the moment, the price is $11.48 per share for Robinhood. Now, of course, what you can see here is that it has significantly fallen from all-time highs. So if you do further research and you believe in this company and you see a future for this company and this stock, now may be a good time to start accumulating. Of course, this is not financial advice. Now, I'd love to hear your thoughts on Robinhood. Do you think this company has a good future ahead of it? And do you actually own this company already in your own portfolio, or are you looking to add it soon? Let me know in the comments below. Stay tuned for the next video. But until then, keep analyzing and keep investing. And don't forget to hit that subscribe button.